Hey, what's going on, guys? This is TerrenceRe, and today I'm gonna go over the Tesla earnings that we had out recently, and then I'll also go over some technical analysis of the charts of Tesla, and I'll talk about the maybe the short-term technical analysis of the overall market, and we'll go over a call option that I have on right after the buffer. So if you already heard about the earnings of Tesla, Elon Musk did his normal selling hope. And so if you follow this channel, you know I'm mostly a technical analysis guy, but with someone as polarizing as Elon Musk and his company, it's big news whenever they do earnings. And, it's a lot of Tesla fanboys out there. So we'll go over some of the key points of the earnings. I'll give you the interesting stuff, the stuff that you can use, fundamentally to make a trade, make a decision, right? My whole point is to be able to make some money off of this. So we'll get right to it. One of the main things he talked about, he said Q4, um, let's see, Q4 is looking extremely good. We're looking forward to a record-breaking Q4. So it really, knock on wood, looks like we'll have an epic end of the year. Um, this right here is a little fact that I did not know. I knew that just obviously just from driving around that you comparing Tesla to other car makers. I had this discussion with a coworker. He said we are still very small percentage of the total vehicles on the road. Of the 2 billion cars and trucks on the road, we only have about 3.5 million. So we've got a long way to even reach 1% of the global fleet. So basically saying that Tesla can still penetrate the market. That there's still market for them to go into. But one of the things that I have, me personally, that I've always said is that just based off of just here in America, the cars are expensive. Teslas are expensive, in my opinion, as compared to. That's one of the main reasons why they aren't more of them on the road. Just my own personal opinion. Um, with with money being tight, uh, just by just by the fact that the Fed is raising interest rates is going to make home loans more expensive. It's going to make car loans more expensive. So that means that you're going to have a higher car payment. So with a car being that expensive, um, as most Teslas are, as compared to a Chevrolet or a Ford, that to me is always gonna be a sticking point. So let's move on. The third thing, this was the big thing that was all over the headlines. He said several years ago, I said, I think on our earnings call, and I thought it was possible for Tesla to be worth more than Apple. He said, in fact, I see a potential path for Tesla to be worth more than Apple and Saudi Aramco combined. Now, this would imply a market cap of more than 4.4 trillion or a share price of $1,400. Now, that's calculated using today's number of shares. The current share price is in right now 210.43 as I'm doing this video. So at the time of the earnings call, I think it was like 220. Now, I'm not saying that can't happen, but this is what I said. As far as Elon, he a great salesman. He'll get on stage, he'll dance. He'll do. He'll do everything he can to sell his product. And so right now it seems like the product is hope. I don't care. I don't care what any CEO, any creator says, as long as the Federal Reserve is raising interest rates, though you're not going to see all these things that they speak of now, possibly when they stop or they crush the market and then they figure out, well, now they got to ease a little bit to kind of like save the market. We may see something like that. But right now, I just don't see it. But, maybe he's speaking in a few years from now. One other thing, now he says, now this is something that he said. He is he when he talked about the Fed, he said the US actually isn't, which is weird. And he says North America is in a pretty good health. Although the Fed is raising interest rates more than they should, but I think they'll eventually realize that and bring back down again. Now, I hadn't even really read over that part before I made the statement that I made, because I think the same thing, right? They're going to the indicators that they generally look at are lagging indicators. Most indicators are, even the indicators that I use for technical analysis are for the most part, besides Fibonacci extension levels, which may or may not hit those levels. So they're looking at lagging indicators, which means that once they see what they want to see, by that time that's lagging. So they've already raised to get to that lagging indicator. So then the market was to begin to turn. So the best thing you can use for a view of the overall stock market, and if we separate the stock market from, you know, the the actual economy, it's just price action. Just look at the S&P 500, the futures, and you'll get an accurate account of what's going on in the market. But he, just as myself, he thinks that the Fed will see that they've overdone it, and then they'll hit a point in time where they'll start to ease. I think that as well. One other thing that I thought that was the Cybertruck. When he talked about the Cybertruck, he says, he called it sick. He said sick twice. He says that is going to be a Hall of Famer, next level. So, the Cybertruck, we've been hearing about it for a while. So the Cybertruck um might be pretty cool. I don't really, me personally, I don't really like the way Teslas look. It's like one or two that I've seen that I like the way they look, but I don't know which model it is, right? I just know I see it. Like that one look all right. But the truck, I do think that the Cybertruck looks good. I agree. It looks sick, right? Was just, can we get that? Now he did talk about he talked about mining metals. Someone asked if Tesla would start mining metals, and he said, "We'll do whatever we have to. Whatever the limiting factor is, we'll do it." He said he said if we have to go mine, we'll mine. So that's the thing that makes Elon Musk like Elon Musk, that he'll do whatever it takes. Maybe another car maker or something like that may not want to step out there on that ledge, and he'll go all the way to the ledge, you know, and damn near go all over the ledge, which is what I literally think he did with Twitter. I've said it before. I think he was like being at the poker table. He got called on a bluff. He was talking big, and the board was like, "Yeah, yeah, we'll take that deal." And so now, and he even makes reference to it. He admits that he may be overpaying for it. Let's see. He said, "Obviously, myself and the other investors are obviously overpaying for Twitter right now." He says the long-term potential for Twitter, in my view, is in order of magnitude greater than its current value. So he thinks that it can be greater than its current value currently. And but he's right now, he actually knows that he overpaid, right? And like I did in a previous video, I showed you guys, you know, where the market was valuing Twitter at. And he knows he overpaid for it, but I think at this point, he just gonna have to deal with it. I don't think the courts are on his side in this particular matter. So now that I've gone over the actual big things of the earnings call, let's talk about the charts. That's why that's if you follow my channel, that's why you're here. Like I told you guys, um, you see right here my Fibonacci extension off of this bear flag. Like you have this down move. Got one, two, three. You got your gap here. Moves generally start with gaps. Look over here to the left. You see this gap, and then you get your move, right? Same thing over here. You got a gap here off of this second candle. This is a gap. And then you got to pull back into that gap area. And you come down and you make your flag. And then you got another gap. And then the move starts. Right? So we got our 1, 2 on the pullback. And then we got our 3. Now the 4, which is somewhere in here, I think that for me, if I'm counting Elliott waves, at the end of this move right here, this big red candle would be my fourth wave. So somewhere in here, we'll get maybe a little consolidation, maybe, right? But I have the next level for me for Tesla is 175. Now there's no guarantee that it's gonna make it there, but and the last level is right down here, right around 105, 104. Now the chances of it getting there are not that great, in my opinion. But one of the things that I use to signal the bottoms for me is other indicators like RSI, maybe MACD. Look for some type of divergence or some type of oversold factor. So if we put the RSI on here and look at it, it was already oversold right here, which is you see where we got that big red candle right here. And then it came up, it resolved the oversold, and it looked like it's going back down because we got a gap today, and the market actually opened down further in Tesla, and it has rebounded since. But I do think that at some point, um, we'll revisit and take this out and hit that area. Right now, the um the expected move has been holding. Guys, I always talk about the expected move. As long as the underlying that you're looking at is liquid, the expected moves pretty much hold. I did a video over the weekend talking about Tesla. It was down right down here on the expected move for last week when it closed out on Friday, right here. And then when it opened up Monday, look, came back for the expected move to the upside here and then came back into it. And now we're down here. So is it possible with it making that low of 202? Is it possible to test the expected move for the week down here right around 189, 190? So that's my frame of reference like for the week. Even if it comes up and closes this gap, I look for a little resistance right here. So today, maybe tomorrow, Friday, come right up in here and close somewhere right around in here. And then next week we'll get some movement. But I do think that overall, I'm still bearish on Tesla. Um, I would not, in my opinion, I'm not going to try to get long, not while it's in this downtrend coming off of this flag up here. I would not try to get long it. If I did, let's say you getting long, right? I like to give scenarios and show you guys of ways to get long if that's what you want to do. It would definitely be with some type of covered call. Here we go. Now I got TastyWorks up. Now this is the one that I actually do my trading in most of the time. You see, I got a call option on the futures and the MES, which is the micro S&P, down about $100. I will talk about that in a minute, but let's go back to this Tesla so I can show you guys this. Go to trade. Whole lot easier on TastyWorks, which is why I advise most people to use TastyWorks. Just an easier platform. We'll go down here to 29 days. Come down. I like to click on the ask. So that's going to give you a buy, change it to 100, right? So now you got your 100 shares that you're buying of Tesla stock. Pick whichever call you want to sell. For me, what I would do if I was doing a cover call, I like to sell the expected move, right? So I would probably come down here and sell this 240. We got an expected move right here. I would sell that. And then there you go. Then lock it in. And so you see, you got a call that you sold against the 100 shares that you bought. Now you look over here and you see it says Delta 74. That's because if you buy 100 shares per share, that's like one delta of that stock. So I'm going to take off the sell just so you can see. Delete the leg. You see where it says delta 100? Because if you buy 100 shares, you have 100 positive deltas of Tesla stock. Now, if I want to, if I set whatever call I sell, you see this is a 25 delta or a 28 delta or a 30 delta. I'm going to sell the 30 delta. Now watch what happens. You see, now let's lock it. Or you can let it move. It's just going to let the price fluctuate. I like to lock it. You see right here where it says delta 70. I took 30 deltas off of my position. And that's the same way you would manage a portfolio of stock. So if you had stock and you was like, I want to trim my position, I want to limit my downside. Like the position is too large, it's going down. You would sell calls against the existing position, and that's all a cover call is. You're basically if now if I say well because you are limiting your upside, but you can possibly if you hold these 100 shares, let's say the market goes sideways, you can buy this back. If you sold it right now, you're going to take in $620 roughly. Maybe in a week or two, it contracts. You buy it back for maybe $3. You make $300 on the cover call, on the call option, and you still own the 100 shares. That's one of the benefits of the cover call as opposed to just buying long shares. And it's also why I showed you on here why you should be using the TastyWorks platform to trade your options and manage your portfolio. It's just easy. It's just easy. Um, Doing it in Thinkorswim. Most of the time, if I'm using Thinkorswim, I'm just buying straight calls or put options or doing like spreads. But TastyWorks makes everything easier to actually do. And you can just while we're looking at that, if I wanted to analyze this, I could come up here and hit the analyze tab, view analysis, and this is going to show us what the position looks like. This is what your cover call look like. And it's just showing you as the market will move, what you're going to make, the P&L. Now when you're doing a cover call, you do want the stock to go up. The risk in this trade, the risk in the trade is the shares of stock. Like a lot of times people you're buying a cover call because you don't do I personally, I was taught not to do a cover call just to do cover calls, right? You want to have the mindset that like you think that because you think that Tesla is a good company, right? I agree. I would agree with that if you as compared to what else we have. And you believe that Tesla over the long run is going to go up, right? So you want to own that stock and you're going to now I'm talking this out in my head, like putting this trade on. You would be selling these calls to just in a sideways market, um, because you're not gonna lose. You just it just capture upside with a worst case scenario, the stock gets called away from you, but you would be in profit. So in order for that call for the stock to get called away, by meaning the stock going up, then eventually what would happen is they'll call the shares away, but you would be in profit. So you would make whatever it went up, $20, um, $30, whatever the case may be, you'll get that $30 minus whatever, of course, you sold for the call option. So you don't it's not of it's a strategy more so for trade, but also to kind of like limit, it's just limiting your risk. It's a better overall trade, it's a higher probability trade. You can make money in a sideways market. That would be ideal. That's ideal. That would be ideal for a cover call, for the market to, for Tesla to, let's go back to the table, for Tesla to stay right in this range. Like said 210, let's just say it just went sideways. And then the value of this call would then like a week or two, because it's already at 29 days. Let's just say the market did nothing. Let's go to 22 days. So all I'm doing is looking at this same call option that's right here, right? At 235. Let's look at that same option a week. It's already at 450. All I'm using the option chain to go out in time and price my options. So here at 29 days, you got what? 580, 22 days, 450. So in 1 week, you can make 130 bucks on the call option. After a week of decay, buy it back, make 100 bucks, put another one on, and still own the stock. If the stock goes down, just depending on how much it goes down, but because if it goes down, like let's say $5, you lose 500 bucks. But if it went down $5, and it went down $10, you lose 1,000. So the risk is in the stock. So you gotta want to own the stock, and you got to be okay with it. But you can always roll the calls down. You can close them out and put new calls on. You can maneuver around with the call and manage your position of owning the shares of stock. So that's just one of the benefits. But if you don't want to do that at all, one of the things you can do, besides a cover call, just depend. Now this is more like if you just think the market's gonna stay somewhere within a range, you can do an iron condor. The premium should be pretty juicy in Tesla. Come out here and straddle one standard deviation. That's what this dotted line is. Maybe sell the expected move on the TastyWorks platform. This ruler right here. Sell the 240 by the 245. Um, this ain't a trade that I actually like, but sell the 185 by the 180. Got an iron condor. Got a 70% probability of making half of that. Limiting your risk. Max loss 322. Max profit 178. Now, depending on the size of your account, you can just come out here and sell the one standard deviation like that. Let's lock that in. And you got a strangle. I wouldn't do this in 22 days though. Let me go back out. I will stay in the monthlies, either 29 or 57 days. Now let's do that. That same strangle. Come down here and sell the 255. I don't like these weird strikes. Do the 160. Take in 445. Now it's gonna create now buying power. Only thing about it, your buying power is going to be almost 6 grand for this trade. And generally, if you're gonna put up, your buying power is gonna be 6 grand. You want to take in maybe on your, for me, at least 20% of that. You want to get about, I don't know, anywhere between from a grand to maybe like 1,200 on your strangle. So I will probably bring this in. Go on and come in and sell the 180. Sell the 245. You get 800. Then your buying power goes up. So this ain't one, but you got a pop of 67%. And of making 50% of that, you got an 86% chance it's moving around. So the TastyWorks platform is the only platform I know that's going to give you like your probability of profits, your probability of 50% profit right there where you can get it. And so the logic is, the coffee good. The logic is behind that is if I'm doing high probability trades, right? Meaning that mathematically I'm supposed to make more money. I'm supposed to win my trades the majority of the time that I do them. Then that means that, so look at it like this. This trade I'm supposed to win 67% of the time. So that means 1,000 trades, I should win 670 trades, ideally. Now, that means that 330 times, or let's make it, bring the number down, 67 out of 100, I'm going to win. I should. That means that only thing I got to worry about is the other 33 times. And those other 33 times, I'm going to manage those trades and manage my losses. So if you can do that, then you can possibly take losers and manage them and buy more time. And if you know how to trade, you can turn those into winners sometimes too. Just by like one of the things you could do is roll this out. Next week, if it's not where you want it to be, roll out in time, pick up more premium. Um, roll down and out. There are just different things that you can do to manage the trade. That's one particular trade. Now, this is a neutral strategy. This is something that you do, excuse me, if you think that the trade is going to be, you want the trade to stay in between 245 and 180 over the next 29 days. And that's it. So you can do neutral strategies. But that's it for Tesla. Just want to go over some things. I don't have anything that I want to do in there. I will talk about at this particular moment. Um, I have a call option uh, on the MES /MES, which is the micro of the S&P futures. So it's just a smaller version. So it's that same trade, if I would have did it here, would have been like a $4,000 trade. Doing it in the micros makes it a $400 trade. And that's just because I'm looking for a bounce in the overall market. Right. And so right now I'm wrong on it. Down about 118 bucks. I've only had it open for 2 days. I still think we're gonna get a bounce, and I'll hold it for I got, let's see, 57 days on this trade. So we're gonna see what it do. Look at my previous video where I went over the Fibonacci extension and expansion for the S&P 500. And what I'll do in another video, maybe later this week, maybe tomorrow, we'll look at the movement of the overall market and see where it's going, and we'll see. Because right now, if I was to look at it, this is it right here. So I'm still within the expected move. So it's possible for this market to bounce. Just looking at the table, the option chain. So I'm not too. I stay small so that the sting of a loss don't hurt so bad, right? And trade my assumptions. Hey guys, if you got anything out of this video, please hit the like button, share the video, and subscribe to the channel. I will be talking about. I got some other things on the docket that I want to do videos on, and that way you hit that little bell, you'll be notified when I upload another video. With that, guys, I'm out. Peace.